Hello again, everyone. We'll be starting the live stream soon. Hope you all had a pretty good weekend. Bob Sullivan, how you doing? Hello. Can I get a sound check from you, Bob? Can you hear the audio? Is it coming in okay? The mic. Full name, how you doing? Sound is fine. Okay, sounds good. All right, thanks, guys. Pablo, how you doing? Well, hello again, everyone. Welcome to another edition of Silver Bullion Television (SBTV) live stream. And I'm your host, Patrick Vera. So, how you guys doing out there? Hope everyone's doing great. Hope your weekend has been doing good. I know it's probably Sunday evening where you're at, Monday morning if you're over in Asia where I am. So, it's the start of another work week here. Okay, let's see. Full name, how you doing? Mike, how you doing? Michael, 61341. Okay. Pablo Pina, Sean McDonald, how you doing? Okay, thanks, guys. Appreciate it. Lieutenant Colonel Brumley, how you doing, sir? Let's see. Option time over. Silver should rebound. Yeah, let's hope so. I think it was a pretty darn good time to buy that dip. So I hope we all had that chance to do so, especially if it starts to go back up again. Live from within the nuke plant. Oh, okay. Todd Thomas, Keith Bush. Keith, first time I've seen your name here, I believe. Welcome aboard. Biloxi, Mississippi. How you doing? Frank, how you doing? Alex Miles, I think first time also. How you doing from New York? Paul Nagel, how you doing? I think another first timer. Good to see you guys. Thanks for joining in. Let's see. It's Golden Week always. Yeah, that's true. Forgot about that. Golden Week. It's about that time again, right? So yeah, we did see gold and silver take a little bit of a beat down. Everything had a bit of a beat down. Even I think cryptos had a bit of a beat down. Jess Parayal, uh, from Philippines. How you doing? Kumusta? Forget. Um, okay, Jason Ernest from Florida. How you doing, Jason? I think it's the first time I've seen both your names as well. So again, welcome aboard. A lot of new names, so I appreciate you guys being here. So again, I hope your weekend went well. And if it is your first time here, or if you have not already done so, please do subscribe to the channel. Go ahead and click on the bell to be notified on updates, and give us a thumbs up if you like what we do. We really do appreciate it, and it really does help us out quite a bit. I posted social media links at the top. Let me see if I can. There you go. I'll post them again for you guys. You can find us on social media as well. Silverbullion.com.sg is our website. We are in Singapore. On Facebook, Silverbullion SG. Twitter at Silverbullion PL Private Limited. The audio versions, SBTV iTunes, SBTV Spotify. And you can join our SB Crisis Tracker Telegram group, where we go ahead and we will post some of the more relevant news to economics, or gold and silver, things like that. And that one is should be t.me slash crisis tracker. That's also found on the links that I added in the chat box. Always thumbs up. Thank you, Colonel. Appreciate that. Okay, so well, I guess first things first. Let's go ahead and take a look at what's going on in our shop with gold and silver. Anyway, this is our website here, silverbullion.com.sg. Again, a lot of you guys requested Aussie dollars, Hong Kong dollars, British pounds, Canadian dollars. So we went ahead and did that. And we still are having our 75% discount on transfer in charges if you decide, or when you decide to go ahead and move your metals over to our vaults and have them in some safekeeping. Okay, US dollar. Okay, silver basically no change. No change right now. 1758. Gold still hanging around that $1,500 range. I think I think the metal should hopefully move up this week. Ratio, that was, yeah, there's a big move in the ratio. We're back up at 85.2. All it means is that it's definitely a very good time to be buying silver, because as that ratio comes back down from 85 to 80, or if you can hit in the 70s, that silver is going to do well for you when you want to flip it to gold. So that's a quick look at the gold and silver prices out there for the time being, anyway. Wooderet Brock from Canada. How you doing? First time I've seen you. I've seen you here as well. So I guess let's go ahead and take a look at some of the news that went on towards the end of the week or over the weekend. This one coming from the Telegraph, where the BIS, the Bank of International Settlements, warns of Lehman era excesses building in the global debt markets. Uh, we're not surprised, right? We kind of know these things are continuing to happen. A late cycle surge in leveraged loans has echoes of financial engineering before the Lehman crisis, and could lead to a cascade of fire sales if conditions suddenly tighten. The world's top financial watchdog has warned. The Bank of International Settlements said the high risk loans have climbed to 1.4 trillion and are increasingly being sliced and diced, much like subprime mortgage debt before 2007. And this was something we talked about last week. They are packaged into debt securities known as collateralized loan obligations and mostly sold to unknown funds. Leverage loans are a form of bank lending to heavily indebted companies with junk credit ratings. Okay, so here we go again, right? We more or less touched on this though last week or the week prior, where we're starting to see banks go into, or investors go into, all of these CDOs and things like that. So you got to wonder, why are we doing these things again? But nothing new under the sun, right? Nothing new under the sun. Jason Bone, how you doing, buddy? Welcome aboard. Uh, Christy Fernando, why the heck are gold prices just tanking the last couple of days? Uh, that's it's a good question. I mean, if I'm 100% sure, I would say what I think it might be, but I can tell you this much: what's happening here in Asia, anyway, in Singapore, a lot of people are buying, and they are buying big. They're buying big units, big volumes. So it's, I think we're kind of seeing two opposite things, because on one end you're seeing all of the selling or maybe even short selling. On this end, you're seeing a whole lot of physical buying over in Asia. So I don't know. It's tough to say what's going on. I mean, you may say there's a bit of manipulation in there. You can't deny that. I mean, we just had recently in the news how J.P. Morgan was once again caught manipulating prices, and they've been doing it for years. So you can't rule that out. Supply and demand is another thing, but like I said, as far as Asia goes, Asia's buying. I can tell you, we see orders coming in, and it's pretty large quantities. So can't tell you why the big difference right now. Let's see. Aaron, how you doing? Bam City, how much gold do you have? What's your address? Going on vacation anytime soon? Can't tell you, my man. Can't tell you. End of the quarter could be full name. Look at the charts for the past few years. They always dump on Golden Week. Yeah, the West anyway. The West, but like I said, I can tell you in Asia, they buy. They are buying right now. Okay, so Michael should start going up by the middle of this week. Let's hope so in some ways. I mean, a dip is always good. You can get back in the game, buy more metal. But I think for psychological purposes, you do like to see gold and silver rise again. So we'll see what happens. Like I say, we'll just see what happens. Should I buy 10K in gold or silver tonight? Well, I would split it if it were me. I would split it between silver and gold. I think it's a good idea to have both metals. And the thing is, over in Asia, like I say, there's a lot of buying going on, and what's also going on is people are moving into cash. People are starting to hang on to cash, and this is also something we talked about where you should have cash on you, and it's when you think about it, there's a whole lot more digital dollars out there than actual physical dollars. And physical dollars are probably what you want to have or keep with you because you just never know. So we found this article where some of the world's richest families they are stocking up on cash.
The world's richest families are stockpiling cash. A new report from UBS and Camden Research surveyed 360 global single and multifamily offices. Results showed about 42% are raising cash reserves. Here with us to explain, Bloomberg's Tom Metcalf, who joins from London. So, Tom, they're stockpiling cash. Just how much and just how prevalent is this sort of fear?
Yeah, it's a real sense of doom and gloom, to be honest, coming out of this admittedly typically conservative sector. So alongside this report, we spoke to a few family office managers, and they were really saying, from their point of view, that there's not much uptick really on any asset class. They think equities will fall and then stay flat. They think there'll be no real returns on bonds, and then alternative investments is going to be really tricky to invest. So as you say, they're now sort of really moving into cash. They're also deleveraging, and when you put the sort of size of this family office market at about 6 trillion, that's going to feed through to the markets. They're a really important asset class, and what is striking is just how sort of pessimistic they are, particularly when you compare them maybe to the average investor.
So when you talk about alternatives, private equity, private debt, that has been sort of a stalwart in terms of performance for these family offices and others. How bullish, bearish are they on this sector going forward?
So that is the one space that, they do love alternatives. I think when you include real estate with private equity and hedge funds, that comes out to about 40% of their overall allocation. So that's a pretty hefty pile. Equities at about 30. But the problem is these returns, while they're probably the sector that outperformed the most, I think they got something like 15%. That's a big decrease from the last few years they've been seeing, and also they're predicting, hey, this is not sustainable. And even for us, and these are the guys who manage money for billionaires, even for us, we're struggling to get the allocations we want in the funds we want.
Yeah.
So it's even for them, it's a tricky situation.
But
Well, I guess I can. I'll end it there. I think we get the picture where the wealthy they're starting to stock up on cash, build their cash reserves, and it's like I say, you got to do as the banks do. I mean, you see the banks, they're struggling to keep their reserves up. Also, we saw this going on in the overnight markets, the repo markets. Banks need cash. They need cash for their reserves. But we're seeing the wealthy guys doing the same thing. They are trying to build up their cash reserves. So, like I say, if the banks are buying gold, I'm buying gold. If the banks are trying to build up their cash reserves, then I need cash on me too. I'm not gonna give it to them. I'm gonna keep it for myself also. So something to keep an eye on what the banks are doing and what the wealthy are doing. This is something I don't think I've seen before, recently anyway, where family offices are trying to raise up reserves for their clients. I don't think I've seen that happen before. So, whatever's going on, I think we will see it soon enough. Okay, let's see. RR just watched this video. Also, people holding cash. Yeah, it's true, and we've been talking about that as well. You should have cash on you. The Fed can print money out of thin air. Can we, the Asian countries, do that, Frank? If your government has a printing press or your bank has that printing press, yeah, you can. You can print up money out of thin air, which is what just about every central bank is doing. It's no longer backed by gold or really much more. It's not really backed by anything nowadays. I don't believe. It's debatable, but you can definitely print up that cash if you need to. Okay, why hold money? Mention tell. Why hold money when central banks are printing them? Why not convert them to gold, silver? Why hold money? Well, it's good as a again a type of insurance because as we say there's a lot of digital dollars out there in the world, a lot more digital dollars than physical dollars. So let's say if something should happen and you need to go and withdraw your cash from the bank, maybe you won't be able to. Maybe you need to go get it out of an ATM. Maybe you're going to be limited to $50 a day, whatever it is. We've seen that happen before. So we're seeing guys now they're starting to hang on to their cash. Pretty interesting. Okay, and why not convert them to gold, silver? You can do that, but I think you need to be diversified. Definitely have the gold and silver, but have cash also because when things first start to happen, let's say they start to unravel, cash will still be good. I thought no, people are just going to turn away from cash, but there's going to have to be that transition is going to be in steps, and when things go bad, the first step is people will still try to look towards cash, but cash may be hard to find at that time, or it may be rationed in some ways where you can only have so much cash taken out of the ATM per day. So it is a good idea to have both cash and physical metal. Okay, let's see. Patrick, do you buy cryptos? I read many banks partnering with Ripple. Ripple is said to be the bankers crypto. They seem to like Ripple. Am I in cryptos? There was a time I was, and I think some of you guys know my story. There was a time I was. I went into crypto because I've seen it as an alternative currency. I fully bought into that, and over time, you started to see, hey, this is really speculative right now, and for me, it's not what I wanted. I didn't want this may sound odd to you, but I didn't want something that had the potential to make money. I was more into things that can protect what I had, and it's something you hear a lot of guys saying. Also, there's a time to make money, and there's a time to protect what you made. So for me right now, I'm more into protection. Buying things that can protect your money, that can store the value of your money and things like that. So for now, I'm not into crypto, but I am looking at it. And will I go back into it? Absolutely. There's going to be a time I will go back into it because the thing that I do see crypto extremely valuable for is something that you can use to transfer payment. So if you want to buy something, use your crypto, and that I see a definite use on that. Bottom line, crypto is not going to go away. I don't think it's going to go away. So there will be a time I'll go back into it, but for now I'm just kind of wait and see because it moves so fast, and there's all different coins, tokens, whatever it is, they seem to be coming out, and you got to look into it. And for me, I am waiting for that crypto that is gold backed, that is that can be verified in truth, that the backing truly does exist. So that's what I'm looking for right now. And I know there are a few players out in the market right now, but I'm not 100% convinced on any of those. But in time, yeah, definitely will. Okay, are you saying the cash are you saying take the cash out of the bank and keep it with you? The Terry Miner show. I'm saying, you know, have some cash on you. Definitely. I do think, things are gonna head south. And like I say, cash is gonna be the first step in that transition for you to get by. You're gonna have to use cash. And like I say, if there are bail-ins, which is already authorized for the G20 is already authorized the banks to go ahead and do those bail-ins, which is basically taking money out of your account. Um, what are you gonna do? You're gonna go to your bank. You're gonna tell them, hey, my money is insured. the bank's just going to tell you, you know what, you're right. Why don't you go ahead and fill out this claim and we'll get back to you? Doesn't do anything for you, right? So for that reason, yeah, definitely have cash. And again, we saw that in Cyprus, where people were limited to what, $50, $60 a day, I think, coming out of the ATMs. So again, it's because there are a lot more digital dollars than physical dollars. So you want to have physical dollars on you. I'm not saying start a run on the bank or anything like that. Just saying have some on you. It's not a bad idea. Okay. So this guy, I don't know yet if this article is entirely true, but I ran across this article where a former mayor in China, 13.5 tons of gold was found in his house. Again, I'm really going to have to verify this, but China police searched the house of Zhang Qi, 57 years old, the former mayor of Zhangzhou. I know I'm pronouncing it wrong, sorry. And found a large amount of cash. He had cash too. There you go. As well as 13.5 tons of gold in ingots in a secret basement in his home, reported the local media. In addition to the mayor's post, the official held others, such as the secretary of the Communist Party. Okay, so he was a mayor and secretary of the Communist Party. According to unofficial reports, in addition to the gold, cash worth 268 billion won was discovered. Luxurious real estate with a total area of several thousand square meters, which the former city manager had been hiding for a long time, became the cherry on the cake for the Chinese Anti-Corruption Committee. This gentleman may face the death penalty. Aren't we lucky we can buy 13.5 tons of gold and not have to worry about the death penalty, right? So there you go. Amazing, huh? Okay, yes, cash is fiat, debt are. Okay, true. Let's see. Pay your bills and save in gold and silver coins are. True. You always should have some gold and silver coins with you. Okay, let's see. What are your smart mirror? Max Strong, smart mirror. Yeah, he's done well for himself, but I find it pretty amazing how politicians go into office and they're really not much different than anyone else. But when they leave, they are just filthy rich. Rich. Must have been a great mayor. Yeah, could have been. Okay, let me see. Okay. Yeah, so that was about this mayor. Again, I need to verify if it's true or not. But hey, like I said, lucky for us, we can go ahead and buy 13.5 tons of gold and not have to worry about facing any death penalty, right? So, the repo markets are still pretty active, and guys are still trying to figure out what exactly is going on with the repo market. And I think they're starting to zero in on what's happening with them. But it's still a concern, as the Bloomberg talking heads, this is what they had to say about the repo market still.
Not a whole lot to panic about. This is nothing to see. It's all done.
It looks like it's been taken care of for now, but it doesn't mean we don't have a problem. There is a problem because, excess reserves are scarce. And that's exactly what the recent, events over the last week demonstrated. So the Fed put a temporary patch on it, okay? But they need to fix the problem more temporarily. Mm-hmm. And Bloomberg Intelligence chief rate strategist Ira Josie has been talking about it for quite some time now. Like, we need to have a standing repo facility, and the Fed will need to increase the balance sheet once again. And they need to do it pretty soon. So the events of the last week actually create some urgency for them to do it.
Eric, is there any cost to balance sheet expansion if the purpose is not to signal something about monetary policy, but rather to just ease the reserve shortage in the system?
Okay, well, I think there's two really important things going on, and there's one that's complete noise. And the noise is how do you manage the repo market, which technically it's a very important issue, but it's not a big picture, it's not a major issue. The two things, the deep questions that are fascinating about this is, first of all, the collective human response to it. So the whole world stops.
Right.
Twitter nearly breaks down. When 99.9% of people don't know what a repo. I'm getting text messages from me, everybody saying, "Oh my God, this happened ahead of 2008." That's what's fascinating, is we're still PTSD. Right. This is still mental scarring. Everybody thinks, when is the next 2008 going to happen? Volatility aversion, risk aversion. It tells you about a collective mindset, right? That's what's interesting about this as a phenomenon.
Well, yeah, a lot of us are still thinking about 2008 and what led to that and what we're seeing again and the next crash coming. I think if you're not looking at that, somewhere you have a bit of a disconnect perhaps within you, but I think most people do understand that, these things, they will continue to happen. They will happen over and over and over. And, as we've been saying, as we've been showing you, not just saying, but actually showing you with documents here and there, information here and there, we're on that same path again. We're definitely on that same path again. Trucker 60 Ohio, October 1, we have to start paying tax on physical gold and silver at local shops in Ohio. Yeah, that's a tough one. I don't think it's a good idea to tax gold and silver, because I think it's something where if you are a responsible government, a responsible state government, local government, whatever it is, if you're a responsible government and you know what's coming ahead, don't put a tax on the things that people are going to need, especially things like gold and silver. Don't tax those things, because those things can help your people out. And in my opinion, you should not be taxing any of those types of items, especially gold and silver, because it's something, like I say, it can help a lot of people, and you want people to be able to acquire it, accumulate it. Don't, any politicians out there, don't tax gold and silver. Yeah, give your people a break, right? Okay, let's see what else is going on. Full name, don't think much of Bloomberg. Yeah, well, yeah, I don't know if I'm a fan of Bloomberg or not, but they do put out some good content, so something you got to kind of take a look at. Okay, we have tax on gold and silver in Arkansas. LT flying. Yeah, that's a shame. I like I say, I don't think there should be tax on gold and silver. John Roylance, and that's exactly why taxing money is wrong. It should not be taxing money. Let's see, Thomas Toops, how you doing, buddy? I have bars, but coins and rounds are more liquid in a SHTF scenario. I would think so. I would think just because of the divisibility, the smaller amounts, you do, if it ever gets to that, I think, the smaller denominations, they're going to help you day to day. Larger ones, they're going to help you with your wealth transfer. So, it's good to have both. Pablo Pina, gold and silver to alternative savings. Absolutely. If you can, I always feel it's a good idea to every month buy some gold and silver. Every month you do it. And from guys I talk to, they'll even say how it's helped them to save money. And what I mean is, because every month they'll buy gold and silver, and then maybe towards the end of the month, getting a bit tight, and maybe they may need a little bit of cash. Their alternative is to go ahead and sell that gold and silver, but they don't want to do that. So what they do is they will buckle down and be a bit more frugal at times with their money, in their financial situation. And then they'll get through the month, and they didn't have to sell their gold and silver. So they kind of learn to work within a bit of a budget, because they know if they sell their gold and silver, there's one more step in between them and their cash. They're going to have to go and sell it somewhere. And, it's a step that for a lot of people, it's can be a bit painful to do. They don't want to do that, so instead they'll just tighten up the belt, and that helps them to actually save. So in a way, gold and silver, it does help a lot of people to actually save money because they take that extra step to put something between them and the cash. If it's too easy to get to the cash, it's too easy to spend the cash sometimes. So you got to have a little bit of discipline there. Okay, let's see. Drive to another state and buy cash, gold and silver are true. You could done that, and I guess LT Flying has done that. So okay, Pablo Pina, if Argentinians and Venezuelans saved some in silver and gold, they can be better off and contribute to crumbling nation. What that would have done is really as their currency is hyperinflating away, it would have stored the value of it. Because I think let's go back and remember the stories of people in Argentina where they get paid and they'll go buy a car, because they know the price of that car is going to go up, within a few days or the next week, and they're looking for things to store the value of their cash in. So, if this is something gold and silver can do for you in that type of a scenario, which we're actually going to get into a bit later on. But one more thing about this whole repo and reserve thing, um, you got to still wonder why the banks need so much cash. Why aren't they funded? So I just want to go back to these talking heads again one more time and see what they have to say.
There's an imbalance, or at least that's what was sort of revealed,
Yeah.
an imbalance in there. Now, whether that's easily addressable or not, that's all, to me, that seems secondary. The issue is, why didn't the Fed, I mean, they knew the Treasury issuance was coming.
Yeah.
They knew they obviously know what the reserves are, or at least have some sense of how those reserves are spread out. And I guess I'm just a little confused as to why it took that last Monday and the breaking point for that to happen for them to react.
That's totally fair, and obviously, there's fingers are going to be pointed and people are going to be blamed because they're going to say you're asleep at the wheel. Either that, or you should have a better system in place. But I think there's a much more interesting question. If I was an American now, I'd be saying, why are we paying interest on reserves? Why are we just handing taxpayers' money over to the banking system when they seem to want to hold them anyway? Right. In fact, they don't seem to have enough of them. So, there are much more important questions. I mean, I think ultimately, technically, look, no central bank on the planet has a problem keeping money market rates down. This is ultimately a technical issue that's very easy to solve because the Fed can create reserves at will. So the question here is, why were they surprised by unanticipated demand? But that they should be able to sort. I mean, everybody else has been able to sort it out. I don't believe it's beyond the wit of the New York Fed to do so.
Okay, so he has some pretty interesting outtakes on what's going on with the Fed as well as does everyone. But I just want to get to one quick question here from Terry, where he says, he has physical gold and silver, and if you wanted it to store with us over in Singapore, how do you do it? There's two ways to do it. The first way is, hang on, let me go to our webpage here. First way to do it is of course on our website. You can come here and then you would go to storage, and then you would go to transfer your existing bullion. And then what happens basically is we have this list down here where you would let us know what your items are. So you would just open it up and then would have some items here for you. You would just kind of tick off what you have. If you would first have to create an account with us, and then you would see more here. You would see more items here that would help you go through the process. But the other way, Terry, what a lot of guys will do is they will simply sell what they have locally, take that cash, and then use that cash or wire those funds to, let's say, a company like us, and then rebuy in Singapore. So that way they avoid transferring fees, they avoid any type of shipping fees, they avoid any type of duties, things like that. And it is a common option. We do see guys doing that, but we also see guys, they prefer to transfer in. Guys in Hong Kong, we've been seeing guys in Hong Kong, they're shipping their things in. So you can do it either physically ship your items, or you can go ahead and sometimes it's easier to just sell it locally, and then go ahead and put that funds in your bank account, and then you can wire that money to let's say a company like us again, and then you can rebuy, and then that way you avoid a lot of these extra transfer in fees. You avoid the which are on sale; they're not a bad price right now, and again, customs duties, shipping, things like that. So there's two options, at least two options for you. Um, Hope that helps. Okay, Maya Baller, how much gold and silver do you guys have? I think you guys out there are doing pretty good. I'm It's got a strong feeling on that. I know you guys are buying what you can when you can, living within your means, and just doing what you can. And for the other guys for people who are very well off, we're also seeing them where they're buying quite a bit. And like I said at the beginning, guys are buying quite a bit right now, and they're buying some fairly large quantities. So, again, things are really starting to move again. But with this repo market and what's going on, and I was watching a episode of Greg Hunter's latest release on his channel USA Watchdog, and he interviewed Rob Kirby. And I think maybe we should get Rob back on the show. But Rob had something pretty interesting to say that I don't think a lot of guys are looking at right now. So I just want to share this with you.
Venezuela used to sell all of their crude oil for dollars, and Russia used to sell all of their crude oil for dollars, and Iran used to sell all of their crude oil for dollars, and Iraq used to sell all of their crude oil for dollars. And up until very recently, Saudi Arabia sold all their crude oil for dollars, but I believe they are now selling some of their oil for other than dollars. So we have many millions of barrels of oil that were formerly transacted in dollars, and these barrels are now being priced in other currencies. But the dollars in the world that formerly bought that oil are now basically, we're looking for a home, and they didn't have a home. So America had to create a home for those dollars, which is why America has ramped up their crude oil production from a low point in the 2004 to 2008 time period of bottoming under 4 million barrels a day. America is now producing 12.5 million barrels of oil a day, making them the world's largest producer of crude oil, surpassing Saudi Arabia. And these barrels that America's producing are all being sold for dollars. And these are the displaced dollars that formerly were being used to buy Iranian, Venezuelan, Russian oil. And something had to be created, or a place, a home for those dollars. Let's just say that the dollars that were left over when Venezuela, Russia, and Iran stopped selling for dollars, they created a spill on the floor, and they needed a sponge to soak them up. That's why American crude oil has gone up dramatically, and that's why it's forecasted to continue to grow, even though they're taking losses on every incremental barrel they're producing, because global dollar rejection is why America had to ramp up oil production to begin with. And global dollar rejection is accelerating. So, and this is not going to stop. So America's going to need to continue to produce more and more and more dollars to soak up more and more oil priced in dollars that America will produce at a loss.
Okay, Rob. Pretty interesting stuff Rob Kirby had to say. The dollars are looking for a home, and the world is using less and less dollars. And these are things we also took a look at. And the pretty interesting thing is these oil companies, I'm pretty sure they have not been all that profitable lately, but yet we are the biggest producer of oil. So we're producing oil and we're probably producing it at a loss. And, I think without saying it, and I don't want to put any words in Rob's mouth, but it's almost as if, you got to ask a question. Are these oil companies being bailed out in some ways? In that, if the world is moving off the dollar for the petrodollar, and if the world doesn't want so many dollars, then yeah, we're going to have to absolutely produce our own oil. And if we're producing it at a loss right now, you got to wonder, how is it all being funded? So what Rob said, it starts to open up a very big can of very big worms, and it's just pretty darn interesting what he had to say. So I went over and took a look at this website, oilprice.com. We'll run through it real quick. Can Shell survive low oil prices, which is what it's been seeing all these years? Shell was like the big thing, right? And then all of a sudden prices started to drop, and then you don't hear that much about Shell anymore. Lower oil prices could drag down U.S. shell drillers at a time when their finances are already looking shaky. But the impact on oil production growth is still murky. WTI, West Texas Intermediate, I believe, is in the low 50s per barrel, which means that the average shell driller is likely burning through cash in the first quarter. Most U.S. EMPs were cash flow negative, a period of time when WTI averaged $54 per barrel, right about where oil is trading today. That is about where oil is today. The rig count continues to fall. In the week ending June 7th, so this is still fairly recent, U.S. oil rig count plunged by 11, falling to 789. The rig count has declined by roughly 11%, tenth of it. And that's the part of it here where we cannot afford to let the rig count continue to fall. In the Permian Basin, which is pretty much a hotspot where much of the action is, the rig count fell by more than 9% over that time frame, from 493 to 496. Complicating matters further for Texas shale drillers is the increasing shift of the oil slate to lighter forms of crude. This is also key. Oil coming out of the ground in West Texas was light to begin with, but as drillers begin to shift increasingly from the Midland to the Delaware Basin, oil is becoming lighter and lighter. So why does this matter? It matters because the refineries along the Gulf Coast are not equipped to handle oil that light. I don't think we've built refineries since the 70s. So it's typically mixed in with other streams to create WTI, but rising volumes of ultralight oil are forcing changes. Instead, the industry is beginning to separate out oil of different qualities, forming new grades, as Reuters reports. In addition to WTI, markets are opening up for West Texas Light and even West Texas Condensate. These newer, lighter grades are trading for discounts. We got that? Trading for discounts, which means that some companies are selling their product for prices well below the WTI price. So yeah, I think Rob is onto something, and we've also had Steve St. Angelo. He's been saying this for a while about oil, shell, energy, things like that. And again, with the world trying to de-dollarize with things like Instex and other things where the world can work their way around the dollar, circumvent the dollar. The dollar is, it's we know this already. Its days are quickly numbered already, and I think we're seeing this now in the oil market back in the U.S., where these guys are operating at a loss, and they've been operating at a loss for years. So, again, I don't want to put words into Rob's mouth, but I mean, you almost got to ask the question: Are these oil companies being bailed out in a sense to keep them afloat because the world is trying to de-dollarize, or they are de-dollarizing, and these dollars need a home. So I think Rob, he absolutely brought up a great point with this. Okay, let's see. No tax on gold and silver in Australia. Okay, that's great. Let's see. Mikey's back. Sorry, guys. I can't see central banks giving up their control. When the reset happens, they will introduce their digital currency. They're already working on that. Um, they're already working on that. Central banks, IMF, they're working on it. As much as I hate them, they are the most powerful people on earth. Yeah, that that's the thing. You know, they're the most powerful people on earth. But the problem is, hey, I never voted for any of them, and neither did you, right? So we have people who are not accountable to us. They don't have to fear us voting them out, and that's a problem. These guys, you know, it's definitely a problem. LT flying at SRS Rocco, yes, correct. Steve does a great job, and he's been doing it for a long time. He knows exactly what he's talking about. Uh, Ride the curve. We can all agree that the world is changing fast, bigly, and in many ways, yeah, it is. It is. Shane Clemens, didn't the U.S. mix in the heavy crude from Venezuela with the Texas light crude, then crack it? Hmm. You know what? I'm okay. I need to look into that one. That's interesting, also, Shane. That one's pretty good. Okay, ride the curve. I received 22,000 in a pension buyout and would like to purchase some physical gold. Could you comment on what would give the most bang for the buck as a one-time purchase? Ride the curve. Typically, you're going to want to look at bars and bigger bars. The reason being, typically bigger bars are going to have a smaller premium. They're going to get you closer to the spot price, and the spread usually is going to be the best as well. So if it is a one-time purchase where you just want to buy in store, you'd be looking at the bigger bars, without a doubt. LT Flying at SRS Rockwell has great technical analysis of the gold, silver. He does. He absolutely does. We had an interview with him a few weeks back, and Steve laid it out. He lays it out in a pretty simple fashion where all of us guys can understand it, and basically he's been saying you have to look at energy. Take a look at energy. You have to look at energy, and you know him saying that, and with what Rob is just saying, which makes sense with the world basically de-dollarizing, getting away from the petrodollar. Again, it makes sense. So oil is, you know what? I think oil is. I think we all know oil has a lot to do with anything and everything just about that goes on in the world. So good work by Rob. Definitely good work by Rob. Okay, so going back, we've been looking at things like going off the gold standard, removing silver from our coins in 65. And when we did that, we saw how, especially in the housing market, remember a few months back, we pulled up those charts, and housing was relatively um, moderate, I should say. It housing, it was moving at a genuine, an even pace. And all of a sudden, when you look at the dates of 71, when gold was removed, then you start to see housing take off. Remember those charts we looked at from Australia, from UK, from US? So it wasn't just a US thing, it was all over the world where we started to see all of these prices rising when we went off the gold standard. I mean, a gallon, a liter of milk is still a gallon or a liter of milk. That never did change, but the price surely changed. Without a doubt, price changed. And then we took a look at things like the petrodollar, which happened just a few years after we went off the gold standard. And this petrodollar, it's almost a 50-year-old deal. And we have to ask ourselves, can the US walk away or renegotiate the petrodollar or the non-petrodollar? Can we do it peacefully? Because when that petrodollar was formed, U.S. had just gone off the gold standard, and we needed something. We needed something to back that dollar, and so we created a deal with Saudi. But at that time, remember, the U.S. was the largest oil consumer. Saudi Arabia was the largest oil producer. But the world has changed since then. We definitely have China coming into the picture where they need oil. They need oil. They need it. They need it big. And U.S. is not the largest oil consumer anymore. So I mean, just to say, things have changed from when that deal was first created. So I would assume that deal now also needs to be changed or scrapped, or just take a look at what's going on again in the world and see that there may not be a place for the petrodollar anymore. So the question then is, can we walk away from it? Can we do it peacefully? And we also talked about Instex, where it's like a little black box that European Union has, that they can go ahead and they can trade with countries that the U.S. might want to sanction. You Europe has different needs than the U.S., and so they may want to do business, and it can be tough for them to do business with some countries because of sanctions. So they created this thing called Instex, and apparently it's already active, and they're bypassing the U.S. dollar, which is what Rob just also talked about. So these dollars need a home. They're looking for a home. Dollars are looking for a home. And so again, this is something we have to watch, because if these dollars are looking for a home on one end of the Atlantic, and on the other end of the Atlantic, we're over here printing these dollars. I mean, I don't think you got to be a rocket scientist to figure out there's going to be way, way too many dollars, which could and should lead into inflation, if not some type of hyperinflation, which is what we see in Argentina. And we also talked about that a few weeks back. Argentina, where, as mentioned, these guys, they're having to buy things just to hold the value of their money because it keeps getting devalued through hyperinflation. So they need to buy things to store the value of their wealth. And what they're doing is they're buying things like cars, or else they're actually getting they're getting out of the Argentine peso and into another currency, which is kind of what we're seeing the world doing with the US dollar. They're trying to get out of the US dollar and into another currency, which you have to look at the reverse. Now, if you're holding a US dollar, what other currency are you going to go into? You may have to be looking at going into other currencies as well. And for me, like I say, this is just me. I'm not looking at the currency. I'm just looking at gold and silver. I'm just looking at putting it into that to store wealth, to protect wealth. That's what I'm looking at. And we also talked about student debt. We talked about MMT, and we're looking at politicians throughout the world. They are looking at some type of socialism, and I don't know how you all feel about that, but nothing's free. Things need to be paid for. Or if everything's going to be given free, then what's the incentive for you and I to go to work or to try and better our life if we may not necessarily be able to do that? So, even this, where we're seeing the world starting to shift over there, and for the very wealthy, they're a bit concerned, because this basically means that the governments will be reaching in their pockets and dispersing it all across the citizenry. And I don't think in their defense, they've worked hard. They a lot of them have worked hard, and they're not doing anything wrong. They've worked hard, gotten ahead, and just want to provide. And it's not, rich people aren't always that 1% of the 1%. A lot of it is just regular families who have done well, but those are the ones that government's going to go after, and that is a bit concerning as well. And that's where we had that presentation on going stealth with your wealth. So you may want to check back on that. And then we also talked about pensions being underfunded, where a pension basically is just a promise. So with all of these in these government, how should I say, being irresponsible and pensions being underfunded. We are looking at old timers, retirees, not getting what they think they were going to get. And this is one reason why when we talk about 401ks, why we often mention it's a good idea to roll over some of your 401k into a precious metals IRA, because like I said, that same stock market that went up and boosted your 401k, you've been seeing your statements. That's the same stock market that when it goes down, your 401k goes down. So maybe a good idea to take some of those chips off the table if you can. But pensions, they're in a bit of trouble. They're being wrapped up again in, different forms of collateralized debt obligations. And that's a bit of a danger too, because when you have these CDOs that, now pensions are wrapped up in, you're going to get credit default swaps that are going to come in, and they're going to have to insure these CDOs. But again, we talked about last week these CDOs and how investors are flocking into them once again. So we seem to be doing, not you and I though, but as a whole, we seem to be doing the same things again that got us into trouble back in 2007, 2008. And this is what I was talking about, the credit default swaps. They're a form of insurance on these CDOs. And if these companies start seeing that, hey, people are making money off CDOs, they're going to want to try and insure these CDOs and get in on the action as well. So, like I say, same thing over again. Nothing's changed. And then we touched on also the repo market, how the repo market became active before the 2007, 2008 crash. And we got guys now talking about permanent overnight markets, or basically QE without saying QE light, whatever you want to call it. We're already there. So, it's interesting because these things, they kind of lead up to events. One of them being the crash, or the Weimar Republic, the hyperinflation. And we're a lot of similarities between what's going on and Weimar Republic. And I want to take a look at that in a bit, but I just want to go through some comments real quick. Um, let's see. Awake in Carlton. I would be afraid of banks taking some safety deposit boxes, wouldn't put it. That personally, I would not keep it in a bank safety deposit box. I would not. If that, I won't say much more except I would not. Chu Tran, are you saying farmers accept silver coins when they sell their produce? Okay, I don't know produce. I don't know the context of it, but years ago, I think it was 3-4 years ago, I remember talking to a guy from Germany, and he was saying that farmers back then were already accepting precious metals as payment. So, I think in certain areas, yeah, it's already happening. From the story that I was told from this gentleman, it's already happening. Just depends where you are in the world. I guess if you can do it, then I think people they'll do it. RR, yes, they accept silver for product. Yeah, which is what I was just talking about. Okay, Minchin Sao, please, you should never store PM in a safety. Absolutely not. Don't store it in a safe deposit box. They are not insured and not really safe either. Yeah, well, safety part, I can't comment on that, but I do know that, even for us, we have a lot of people who did have things in safety deposit boxes, and they've taken it out, and they've come over to keep it in a vault. They've come in to store it with us. So I mean, we do see people moving out of bank safety deposit boxes. Let's see. I missed the source. Where can I read the article on repo forever? Those I gotta see if I still have that link. But there's been a few people who have been talking about. They call it POMO, POMO, the permanent, overnight market. That basically means I would say it's just QE without them wanting to say QE. Okay, let's see. Do not fret. Quant computers will indeed crack crypto, but only at a rate that can't keep up with the sheer number of users. I just read an article came out that I think it was Google had a quantum computer. It did in 3 minutes what it would take a normal computer 10 years to do. And so now there's a bit of a concern, yes, with that. But I believe it was an article coming out from Google. So you might want to research that. Okay, let's see. Silver testing 1735. Well, buy the dip. If you could get in on it, buy the dip. It's the end of the month, right? So everybody's getting paid. So let's use some of your salary and go ahead and buy some silver and gold. I know, I will. Okay, so we talked about what's going on, and there are some similarities to Weimar Republic and their hyperinflation. So I want to go into that. At the Weimar Republic. Hyperinflation in the Weimar Republic. This basically is from Wikipedia. It was a timeline of what happened back then. So hyperinflation affected the German Papiermark, sorry guys, the currency of the Weimar Republic between 1921 1923. It caused considerable internal political instability in the country. The occupation of the Ruhr by France and Belgium, as well as misery for the general populace. Okay, so I think most of us know about Weimar Republic, but we'll go through it. To pay for the large cost of ongoing First World War, pay for the cost of war, Germany suspended the gold standard. Sound familiar? At that time, U.S. was involved in the Vietnam War, and we went off the gold standard. So here's a similarity right here. To pay for the large costs of the ongoing First World War, Germany suspended the gold standard, convertibility of its currency to gold, when the war broke out. Unlike France, which imposed its first income tax to pay for the war. So France was a bit more responsible, right? German Emperor Wilhelm II and the Reichstag decided unanimously to fund the war entirely by borrowing, a decision criticized by financial experts such as, now that's a name, I'll leave that for you folks to pronounce, as a dangerous risk for currency devaluation. The government believed that it would be able to pay off the debt by winning the war. I think in a lot of ways, U.S., we've had that same mentality, right? If we can win the war, war is good for the economy. When it would be able to annex resource-rich industrial territory in the West and East. So again, there's a bit of a similarity again. But the strategy failed when Germany lost the war. The new Weimar Republic was saddled with a massive war debt that it could not afford. That was worsened by the fact that it was printing money without economic resources to back it. So here we are. Again, I'm just using the U.S. as an example, but Korea was a stalemate, no winners, no losers. Well, I shouldn't say that. It's unfortunate for Korea. Everybody's a loser with this. Korea needs to have some healing there. A lot of families are separated still. But Vietnam, we did not win. U.S. did not win. First Gulf War, second Gulf War. I don't know if you can say that it was a victory or there was a win, because the premise was so-called terrorism, right? And there's still terrorism, right? We're still in Afghanistan, still in Iraq. So, this war debt, nothing, I shouldn't say nothing, but I think the expectations that perhaps the military industrial complex or whoever it might be, they were not met. Basically, it was not met. So and things were worsened by the fact that it was printing money without economic resources to back it. So that's what we're doing as well, right? So in April 1921, the Reparations Commission announced the London Payment Plan, under which Germany would pay reparations in gold or foreign currency in annual installments of 2 billion gold marks plus 26% of the value of Germany's exports. This was accepted by Germany after an Allied ultimatum the following month. The first payment was made when it came due in 21. It marked the beginning of an increasingly rapid devaluation of the mark. Since reparations were required to be repaid in hard currency, not the rapidly depreciating paper mark, one strategy that Germany used was the mass printing of banknotes to buy foreign currency, which was then used to pay reparations, greatly exasperating the inflation of the paper mark. So they're trying to print their way out of this, and we're seeing how a lot of central banks are trying to print their way out of basically debt. Germany had a debt to pay, they printed money. A lot of countries have a debt to pay, we're printing money, trying to print the way out of debt. In 22, Germany failed to pay France an installment of reparations on time. This is just a year later, right? And France responded in January 23, the next year, by sending troops to occupy the sorry, Germany's main industrial region. The German government ordered a policy of passive resistance in the Ruhr. Workers were told to do nothing which helped the invaders in any way. What this meant in practice was a general strike, but all the workers on strike had to be given financial support. The government paid its way by printing more banknotes. Germany was soon awash with paper money. The result was hyperinflation. A loaf of bread in Berlin that was about 160 marks at the end of 1922 cost, what's that, 200 billion marks less than a year later. So inflation, hyperinflation doesn't take that long to start moving in and spread. From August of 21, we're still in the beginning, Germany began to buy foreign currency with marks at any price. They're trying to find something that the rest of the world will accept, right? So in a sense, we can loosely say the world was not de-dollarizing, but de-dollarizing from marks. I guess we can loosely say this. So Germany began to buy foreign currency with marks at any price, but that only increased the speed of the breakdown in the value of the mark. As the mark sank in international markets, more and more marks were required to buy the foreign currency that was demanded by the Reparations Commission. Fall of 22, this is still all in the beginning. Germany found itself unable to make reparations payments. The mark was by now practically worthless, making it impossible for Germany to buy foreign exchange or gold using paper marks. Instead, reparations were to be paid in goods such as coal, commodities. Okay, they don't want your money anymore. You can't buy much with your money anymore. So I have to give you something else now. I can give you commodities. And this is basically what it was. They had to go to coal. By November 23, the US dollar was worth a lot in German marks. Okay, so these are some of the bills that they went through during that time. Stabilization. The hyperinflation crisis led prominent economists and politicians to seek a means to stabilize German currency. In August of 23, an economist, Karl Heffrich, proposed a plan to issue a new currency, the Mark. Okay, so this was one of their solutions. Let's just create a new currency to be backed by mortgage bonds, indexed mortgage-backed securities. Would that be a equivalent to the market price of rye grain? The plan was rejected because of the greatly fluctuating price of rye in paper marks. They're basically trying to find anything that can back up the currency at this point. Agricultural Minister Hans Luther proposed a plan that substituted gold for rye and led to the issuance of the Renton mark or mortgage mark, backed by bonds indexed to the market price of gold. The gold bonds were indexed at the rate of 2,790 gold marks per kilogram of gold, the same as the pre-war gold mark. Renton marks were not redeemable in gold, but only indexed, set up and controlled by the German finance minister Hans Luther. So they're not even redeemable in gold. Okay. November 23, this is all just in a couple of years' time. The new Renton mark was introduced to replace the worthless paper mark issued by the Reichsbank. 12 zeros were cut from prices, and the prices quoted in the new currency remained stable. By November 23, 500 million Renton marks in circulation, which increased to 1 trillion by January of 24 and trillion 800 million by July 24. Meanwhile, old marks continued in circulation. The total paper marks increased to 1.2 sextillion. It's a whole lot of zeros. And in July of 24, and continued to fall in value to a third of the conversion value in Renton marks. 24, monetary law permitted the exchange of 1 trillion paper mark note to the new Reichsmark, worth the same as the Renton mark. By 24, $1 was equivalent to 4.2 Renton marks. So you can see how they had to throw in new currencies. They used the new currency to replace the old currency. And they tried to find backing for this new currency in order to get people to have confidence again, because money is all based on confidence. If you think something to be money, then, and majority of people think it to be money, then it may be money. It's all based on confidence. You lose that confidence, you lose that money. It's as simple as that. A decree in 25 reinstated some mortgages at 25% of face value in the new currency. Effectively 25 trillion times their value in old paper marks. If they had been held for at least 5 years, mortgage debt was reinstated at a much higher rate. Government bonds were. The reinstatement of some debts and a resumption of effective taxation in a still devastated economy triggered a wave of corporate bankruptcies. We came close to seeing, in fact, we did see a lot of those, but they were bailed out, right? One of the important issues of the stabilization of hyperinflation is the revaluation. Revaluation, what I like to call the transition. We're going to transition from a new monetary system, from the current system to a new system, right? Things are going to be priced accordingly. So this term normally refers to the raising of the exchange rate of one national currency against other currencies as well. It can mean revalorization, the restoration of the value of a currency depreciated by inflation. The German government had the choice of a revaluation law to finish the hyperinflation quickly, or of allowing sprawling and the political and violent disturbances on the streets. Government argued in detail that the interests of the creditors and debtors had to be fair and balanced. Neither the living standard price index nor the share price index was judged as relevant. So the people are talking. Government needs to listen. So the analysis, the hyperinflation episode in the Weimar Republic in the early 20s was not the first or even the most severe instance of inflation in history. We all know Zimbabwe, right? For example, there have been more that were inflated. However, it has been the subject of the most scholarly economic analysis and debate. The hyperinflation drew significant interest as many of the dramatic and unusual economic behaviors now associated with hyperinflation were first documented systematically. Exponential increases in prices and interest rates, redomination of the currency, consumer flight from cash to hard assets, and the rapid expansion of industries that produced those assets. And I think this is where most of us are at, right? We're between cash, we're between hard assets, and we're between some equities that, say, like mining stocks that produce those assets. John Maynard Keynes, this is interesting, described the situation in the economic consequences of the peace. The inflationism of the currency systems of Europe has proceeded to extraordinary lengths. The various belligerent governments, unable or too timid or too short sighted to secure loans or taxes, the resources they required, have printed notes for the balance. And this is where we're at. Seemingly a lot of politicians throughout the world, they don't want to tax you. If they don't have to, they won't want to tax you. If they tax you, they know you're going to vote them out. So they don't want to tax you. So they're going to resort to kicking the can down the road, and printing notes for the balance. This is what we depend on, right? We always hear raising the government debt ceiling, raising the government debt ceiling. Politicians need to understand they're public servants. They work for us. They should not be putting us in debt. They should be bringing us out of debt, because we do have that right, uh, for the pursuit of happiness. Correct? I think everyone has that. It's not just in the U.S. Every person should have that right to pursue happiness, not let that get squashed because we're all being anchored down by debt because politicians were more concerned about staying in office than taking care of the things they needed to take care of. Anyway, reparations accounted for about a third of the German deficit from 20 to 23, and so were cited by the German government as one of the main causes of hyperinflation. Other causes cited included bankers and speculators, particularly foreign. Hyperinflation reached its peak by November of 23, but ended with a new currency. The Rentenmark was introduced. To make way for the new currency, banks turned the marks over to junk dealers by the ton to be recycled as paper. So this should be the ending here. The cause of the immense acceleration of prices seemed unclear and unpredictable to those who lived through it, but in retrospect, it was relatively simple. The Treaty of Versailles imposed a huge debt on Germany that could be paid only in gold or foreign currency. With its gold depleted, German government attempted to buy foreign currency with German currency, equivalent to selling German currency in exchange for payment in foreign currency, but the resulting increase in the supply of German marks on the market caused the German mark to fall rapidly in value, which greatly increased the number of marks needed to buy more foreign currency. Again, it was a currency people did not want, and if they took it, they wanted more of it because they were taking on risk by taking on that currency. That caused German prices of goods to rise rapidly, increasing the cost of operating the German government, which could not be financed by raising taxes because those taxes would be payable in the ever falling German currency. The alternative was some combination of running a budget deficit and simply creating more money, both increasing the supply of German currency on the market and reducing the currency's price. When the German people realized that their money was rapidly losing value, they tried to spend it quickly. We're seeing this in Argentina, right? That increased monetary velocity and caused an ever faster increase in prices, creating a vicious cycle. The government and the banks had two unacceptable alternatives. If they stopped inflation, there would be immediate bankruptcies, unemployment, strikes, hunger, violence, collapse of civil order, insurrection, and possibly even revolution. If they continued the inflation, they would default on their foreign debt. However, attempting to avoid both unemployment and insolvency ultimately failed when Germany had both. So that's taking a look at Weimar Republic and seeing how the things that they've gone through, we're kind of doing the same today. And it's it's concerning to say the least. So I know you guys have been chatting up a bit over here. Let's see, where can I jump in? See something, say something. China is releasing a government-backed crypto. Okay, haven't heard anything about that, but at some point they will. I mean, I think at some point they will. At some point, Russia will. At some point, even the U.S. will. There'll be Fed coins. There'll be, as jailbreakers would say, G coins, Putin coins, whatever it is. I think you have to expect that they are going to create some type of crypto for their monetary system. Okay, let's see. RR, LOL, already spending my fiat currency fast. Yeah, it's hey, with this dip in silver, I think I'll be spending mine pretty quick as well. But again, that Weimar Republic, we all hear about it or have heard about it. Some understand, some of us understand, some of us, maybe it's still a bit unclear. But basically, it came down to loss of confidence, and sometimes, or I should say, maybe most of the time, it's not even by that country's own citizens. It's a loss of confidence by other countries. So when the other countries lose confidence in your currency, it becomes risky to trade with you. And if they are going to trade with you, they're going to demand more dollars because, as said, if they're going to take your currency that they feel is risky to hold, they're going to require more of it. And eventually they're going to pull that currency up and up and up. Pulling it up meaning eventually you can head into hyperinflation, because what's going to happen is your central bank is going to end up printing money to meet the more dollars that other countries are requiring. And this is something, again, it goes back to confidence. It's hugely important. If you don't think something is money, it's not going to be money. It's as simple as that. If nobody wants it to be money, it's not going to be money. And this is why I think when we do go into the next monetary system, this is why I do think it will be some type of crypto backed by gold, backed by some type of precious metal, probably gold. And that's because that confidence factor. People would be confident if they knew it were backed by gold. The only issue with that is politicians need to be responsible. And that's really what it comes down to. When they started caring more about being reelected, they disconnected with the people who put them in office. And this is where we are right now today. We're seeing a lot of it. And it's like I say, you got to wonder, a guy goes in, he's just an average Joe. He comes out and he's very wealthy. Well, what happened in there? What happened in there while you were serving time for us? How did you do it? You know, how did you do it? Yeah, and that's the thing. Whatever they did, they need to take care of us. And if we see that they're not, we're going to take care of ourselves. And this is why, like we say, you need to be your own bank. Be your own bank. Get gold and silver, things that can store the wealth. Have some cash on you. And you don't want to end up in this whole Weimar Republic type of a thing. Let me see. Okay, so yeah, that's what it came down to, and basically they ended the hyperinflation by going to a new currency. That's what they did. Okay, sorry. Let me see your questions again. Let's see. Ken D, I thought so too, Patrick. But people say a gold-backed crypto won't fly for one reason or other. Okay, you know what, Ken D? I think that depends on of course who you talk to, and the ones that tell me it won't work is because they feel that once you link it to gold or have a backing to it, then that can be confiscated. I don't particularly buy that, because in actuality, if these countries create their own cryptocurrency that's backed by gold, what are they going to do? Confiscate it from themselves? I mean, I don't particularly buy that, but I do know you get a lot of people in the crypto community who feel that it defeats the purpose of a decentralized coin once you back it by something, because it's that something that could then be confiscated. But I don't particularly buy that. It's I don't buy it that that is the reason why people say it won't work. I just don't buy that. Okay. Orange partisan gold-backed cryptos have their own set of problems. Who knows how much gold there will be in the vault, like Fort Knox? Nobody knows even now. Well, I think there are ways you can solve that. I mean, I think the gold all has to be proven, and I think once it's all up on the blockchain, it's immutable, right? You can't really change it, so everybody knows how much gold is backing a certain coin, and you scale that up, everybody will know how much reserves a country has or a bank has that's backing their Fed coin, or whatever it is. So I think those things can be solved. Um, okay. Jason, a government crypto is scary. Everything you do can be tracked, no privacy. Well, as far as what you buy, it could be. I mean, you have to imagine if everything every shop owner had, his whole inventory had to go on the blockchain because government wanted to be able to track it for tax purposes, then in that sense, yeah, I think probably they would know. So you can't discredit that, but you just gotta hope and pray that it doesn't get to that point. But that is one of the scarier parts about crypto. But you know, like anything, there is some good in it, there is some bad in it. But for now, the thing is, none of us can control what they're gonna do. All we can control is what we can do. And again, that goes back to being your own bank. If the bank is buying gold, I'm buying gold. If the bank is saying they need cash, then I need cash. If very wealthy, very wealthy people are saying, I want to have a higher cash reserves, then again, same. I want to have cash too. For some reason, these people want to have cash. And again, they are buying a lot of gold and silver. We've been seeing a lot of a lot of big buying lately. So, and I guess, but it's not all bad. I mean, earlier in the week we had Doug Casey, and he wrote an article about the next depression will be one for the record books, the Greater Depression. And he was on to say in his article that just because society experiences turmoil doesn't mean your personal life has to. And the depression doesn't have to be depressing. Most of the real wealth in the world will still exist. It's just going to change ownership. Okay. It's still going to exist. Things like, again, wealth protection, stores of value like gold and silver. And when he says it's just going to change ownership, things like gold and silver can help put you in a position where you can take advantage or find opportunities in this type of a scenario, because you are going to have something that people are going to want. You'll be able to make trades. Okay. Um, he goes on to say we're now at the tail end of a very long, but in many ways a very weak and artificial economic expansion. That is true. At the same time, we've had one of the strongest securities bull market in history. We both are the result of trillions of new dollars created over the last decade. Right now, very few people are willing to consider the possibility of tough times, let alone the greater depression. But perverse though it may seem, this is the very best time to think about it. It is true. The U.S. economy is a house of cards built on quicksand with a tsunami on the way. I urge everyone to read up on the topic. For now, I'll only briefly touch on the nature of depressions. There are at least three good definitions of the term. a period of time when most people's standard of living drops, a period of time when distortions and misallocations of capital are liquidated, a period of time when the business cycle climaxes. And I think we're sort of seeing all these three things coming into play. Either way, inflation sends false signals to the businessmen, especially those who get the money early on. As it filters through the economy, they're thinking how to put that money to work, right? But as it filters through the economy, making them overestimate demand for their products, that causes them to hire more workers and make capital investments, often with borrowed money. This is called stimulating the economy. Okay. Basically, he's just going to talk about, what he sees coming ahead. But he does go on to say this. The good news is that there's still time to protect yourself. The best way to do this is by owning physical gold. And again, it's something I don't think in in our heart of hearts, none of us are trying to be a salesman. I can say that quite honestly and openly. None of us are really trying to be a salesman. I mean, yes, we are in positions where we may sell it, excuse me, but in our heart of hearts, we're not trying to be salesmen. We're here because we see what's coming on ahead and we feel something strongly pulling us to tell you about it, to help you understand it. And we're not trying to, like I say, in our heart of hearts, we're not trying to sell, get you to buy this today, buy this tomorrow. That's not it. We're just trying to get you to understand that there are things coming. And as I say, in the end, we're all going to be one of two things. We're either going to be a blessing or we're going to be a burden. And if there's too many burdens out there, world can be a very, very, hate to say it, but dark place. So we have to try and be that blessing if we can. Try and do what we can, inform people where and how we can. Okay, so I'll take a few more comments and then I'll wrap it up. Kendi, I guess I grow my own food too. Then food's important. I mean, you gotta have your food too, right? Okay, let's see. Rumpelstiltskin, you are also responsible for paying for all of these. Very short-sighted. That's a very short-sighted comment. Okay, let's see. You gross. Okay, let's see. David Burkut, crypto will come back when the power does. Okay, well, that is one of the concerns. If the power goes out or some type of EMP event happens, will crypto still work? That's a fair concern. Okay. Um, let's see. You can grow cherry tomatoes right on a. That's true. Okay. Let's see. Water. Yeah, water is important. Okay. Yeah. So, I mean, you guys are welcome. I mean, I know this live stream was kind of spotty. Apologize for that, but I think you guys all understand, and that's something that personally makes me happy, and I appreciate that you guys do understand, and I appreciate that you folks do understand what it means to protect and provide for your families, and that you understand, we need to be a blessing, not so much a burden. And it's not easy talking to people about it, but you know, where I'm at, I'm fortunate to see um, how wealthy people think and how wealthy people talk, and they're concerned. They are concerned. Like I say, the phrases I hear from them is there's a time to make money, there's a time to protect what you made. They're concerned, as we've shown here. They want more cash reserves, and as I say, we are seeing a lot of heavy buying as well in physical. So there's a lot of concern out there, and I appreciate that you guys do understand it, and you're not just brushing it off, and thinking, oh, another sky is falling type of a deal, because it's not falling, but it is getting lower and lower each day. And we need to do what we need to do. Basically, that's what it comes down to. Uh, so again, I appreciate your comments here, and I know it's getting late, and we're at about yeah, it's getting late wherever you're at. Okay, so let's see. Bodie, what silver coins do you see the wealthy buying the most of? Eagles, maples, coins? No, the wealthy, they're buying bars. They are buying 1,000-ounce bars, LBMA bars. They are buying 15-kilogram bars. They're buying big stuff. They're buying really big stuff. And the thing for them is, you got to understand, rich people, they have the means to do things that other people can't. And there's no reason to get upset about that. But, they have the means maybe to fly off to a different country. They have the means to move between assets pretty quickly, pretty easily. And because of this, they do think a little bit different. And they're doing the same thing as you and I. They're just trying to provide for the next generations. Things like that, generational wealth, and that's what gold and silver does for them. So they tend to buy a lot, and then they'll store it. Sometimes what we see is people who are storing, they'll go ahead and take a loan out against what they have, and they'll buy more. This is part of the peer-to-peer program that we have. Or they'll take a loan against what they have, and then they'll reinvest, redeploy some of their assets. So, they do things a bit different. It's interesting to see what they do. And you know, not all of us are in the position. That's true, but I am going to say this again before I go. If you have a 401k, you have that portfolio that when you hear people talk about put 10% of your portfolio in precious metals or whatnot, that's what they're talking about. They may not, say it directly. We may think it's these rich guys that they're talking to or whatnot, people who have money that they're talking to, and they are. But for the average person, also, that 401k, it can help you immensely if you just understand it a bit and try and look into things like SD IRA, self-directed IRA, precious metals IRA. Those things can help you quite a bit. And the good thing about that 401k, when you do buy gold and silver with it, it's not money coming out of your pocket. It's money you already have. So it's not an extra burden on you to go ahead and do that. But anyway, just look into it, because I can tell you these are things that people who know money and understand money, these are the things that they look at. Okay, go Cowboys. Cowboys are playing. Yeah, I think I might have to watch that game too. Just kidding. Okay, but guys, I appreciate you being here. Just again, take care of yourself. Take care of the things you need to take care of. Protect, provide. Be a blessing, not a burden. And just saddle up for what's coming ahead, and silver up as well. And I'll see you guys next week. You guys take care of each other. All right. See you.